It's December 1st, 2010, and this is our video Forex trading blog. One of the first things I check every day in trading is our FX total view, which shows you which currencies have been up or down 3+ days in a row. Today, the New Zealand yen, euro dollar, and euro yen have been down 3 days in a row and are likely to reverse and go up. And the Australian dollar, New Zealand dollar, and pound dollar even more so because they've been down 4 days in a row. Keep this in mind as we go through today's currencies. Here's the dollar yen. The weekly and monthly trend, as you can see, is up, and the market kind of double bottoms right here at the previous day's low. We have an NR7 inside bar pattern on the hourly chart. The previous hour range was less than the previous 7 1-hour bars, and this breakout here led to a nice little move. Once price is above the hourly, it's more likely to go up, and you have a nice little combination rectangle pattern and wedge pattern breakout. You can see there's virtually no weakness there, and the weekly and monthly trend is up, which is always a good thing. This is your first profit target, and our trading zones show resistance areas above, and the market went up. I probably would have exited the trade somewhere up in here. The market had tremendous momentum. This is our trend explosion system. So you buy the little pullback here, you draw your trend lines over the bars high, and you go long when that breaks. Your stop's just a few pips underneath here. You're risking less than 10 pips, and the market kind of goes up and stalls out here. We have a trend reversal triangle, which oftentimes is the end of the move. Notice how often that tool works. Right here, right here, right here. Right here is a little bit early. This one here obviously failed, but nailed the high of the day. And once the market double tops up here with a little bit less momentum, aggressive traders might do a counter trend trade. I think I would have passed on that because the weekly and monthly trend were up. But if the weekly and monthly trend was down, this would have been a good trade on the short side. CAD yen came down last night, hit our Fibonacci level right here, and then went above the hourly. The daily and weekly trend were down, the monthly trend was up. And so in that case, you're basically looking to look for shorts right here when the market hits the hourly. If it breaks down underneath that sideways range, you'd go short, but it doesn't. Instead, it breaks out above the hourly, which is a bullish sign. You might go long here and get out at the upper containment band. You can see tremendous intensity of that up move, and therefore you're looking to buy the next pullback if the weakness isn't that much, which it isn't. So you draw your trend lines over the bars high, you go long right here, and you can see the market worked its way up. I usually draw fibs on the first swing and look to get out at the first or second fib target. But if it does go above the first or second fib target 1.618, as soon as it kind of stalls here, I'd be out of the trade, and I would have missed this remaining 25-30 pips. Traders, seeing that the market is still strong and now the daily, weekly, and monthly trend is up, might have bought this pullback right here. A trend reversal signal buy in the direction of the trend is a very good trade right here, and the market went up another 50 pips. Here's the New Zealand yen. Keep in mind this is one of the currencies that was down 3 days in a row. And so what we're mainly looking to do today is if it goes down today and hits our lower containment bands, we want to buy. But if it also breaks from underneath to above the hourly, you want to buy. So you get in here, and as you can see, as this goes up right here, the market's extremely strong. It's very likely to continue. You draw your fibs on this first wave, and usually the first or second fib target is where it's going to stall. We have the previous week's low here, major resistance, very likely to pull back before continuing up, and so you exit that trade right there. This is an excellent example of our Elliot two-wave fib pullback. You have a pullback right here, and then you wait for a move up, and then it goes down right to the 1.382 fib target. Great place to get in. You might have got out of this trade because it went sideways for so long with a small profit or break even, and then when it finally broke out again of this sideways rectangle range, you would have got in again here with your stop underneath the low. And anytime the market goes my way, then comes against me and starts to go up again, I immediately yank my stop up, and this just takes off again. You can see incredible strength. You could draw your fibs on this previous swing and look to get out right here near the fib target, monthly pivot level, and our trading zones. Notice the Fibonacci projected high that I drew last night was the high today. I don't think I would have hung on to that trade that long. I would have got out right here, and you can also see another trend explosion system. Huge move up with intensity. Then the market has a little wedge pattern right here. Great buy. Again, the market's right near the edge of where it's likely to go, so you're buying currencies at the high usually has a smaller potential than when you can get in right down here in the middle of the range. Here's the Australian yen. This currency has a daily, weekly, monthly trend that is down, so you might have gone short right here, made a little bit. You can see the market's going sideways. The trend intensity is green, the bar colors are green. You have major resistance above it, so I wouldn't have bought down here because it was likely to stall here. It didn't, and as the market exploded up, you have explosive, tremendous trend strength, which means you want to buy a pullback. We have another perfect textbook example of an Elliot two-wave pullback. The market went above our upper containment band, pulled back, tried to go higher, failed, and came down and hit the 1.318 or 382 fib target. Great place to get in, almost to the pip, and this immediately went your way. You might have got out of this trade here as it was moving sideways for about a 25 pip move, and the market wasn't willing to pull back, so when it broke out again, you give it a shot. It's always risky to buy up near the high, but the upper containment band's up here, fib target's up here, and when it gets above the upper containment band, when you see the momentum slowing down while the price is going up, it's usually a reversal sign, so you might want to exit the trade there. And I probably would not have bought this pullback because there's too much weakness on the pullback, but that trade worked as well. I wouldn't have taken that myself. I try to cherry pick the trades that are likely to give big potential pips while having lower risk, and buying after showing intense weakness is a riskier trade. I wouldn't have taken it. Pound yen. This currency is kind of going sideways right underneath the hourly, the daily, weekly, monthly trends down. You might have gone short right here earlier. The market kind of went sideways. There's no weakness. And anytime the market chops around sideways for so long, usually it's going to break out. If it breaks out to the upside, it's going to go up. If it breaks down underneath, it's going to go down. You might have got into a trade down here on the short side. You would have lost money. And once it does break out, you can see tremendous strength on the way up. This is our trend explosion system. You wait for a pullback and get in. And also almost another textbook to the pip Elliot two-wave fib pullback, and this shoots up about 70 pips. Again, it's lost some of its momentum from before, but this currency is very strong today. It pulls back. You might have got in here on this trend reversal pattern right here when it broke out of that sideways 30-minute range. You go long, and immediately the bars go green, and it goes up here and kind of stalls out. You want to get out of your trade. Again, trend explosion system, you might have decided to buy this pullback. You might have had a loss here. The second trade worked. And once it gets up near the upper containment band in afternoon, things tend to die down. It's not worth taking the risk. There's less reward after noon, so don't take the risk. Here's the euro yen, another textbook example of a currency being down 3 days in a row. It's very likely to reverse up. Came down today, last night, and found support at the monthly pivot level here, and it had an NR7 inside bar pattern, very low range right before the breakout, and the market exploded up. You would have got in here because it was down 3 days in a row. And then it stopped right at our fib level, so that's a great place to get out of the trade. And another textbook example of an Elliot two-wave pullback. You draw your fibs off the first move, hit the 1.382 fib target, you get in, and this one almost immediately went up 50 pips. And it went up with less momentum, so you would have got out of your trade somewhere up in here. I can't say I would have bought this up here near the high, usually above the upper containment band. It's more likely to reverse, and it didn't have that much strength the last time, so I probably would have missed this remaining move up, but it exploded up, and again we had tremendous strength, and it pulled back. It's now inside the normal range, and buying a strong currency when it's underneath the upper containment band, goes sideways here for half an hour. I probably would have taken this breakout right here, the stop underneath the low, and it's likely to double top up here because it's up too much. Great example of a currency down 3 days in a row. Here's the dollar CAD. This currency, once it breaks down underneath the hourly moving average, you have a narrow range 4-hour pattern. Those combined with breakouts above or below the hourly tend to be decent trades. Now this one was falling without that much weakness, which means the dollar might have just been slightly weaker or less strong than maybe a stronger CAD. And if you did take that trade, which is a good one, when it's going down like this and it doesn't have that much weakness, you usually want to get out near the lower containment bands. And I probably would not have sold this next move because there was far better opportunities at the time. Here we have a lot of momentum to the upside. I might have tried to buy this little pullback right here, which didn't work, and I would have lost money. Obviously, underneath the hourly, it's more likely to go down. Above the hourly, it's more likely to go up. That's why we always teach it. dollar Swiss. You know, this one is above the hourly, the daily, weekly, monthly trends up, but we have a monthly pivot level up here, previous day's high, and a projected fib level, which is likely to have major selling, and the previous week's high. So there's major selling zones above it. If you're looking to buy here when it goes from underneath to above the hourly, you're not likely to make more than 10 or 15 pips, and for that reason and that reason only, I probably would have avoided it. If it had broken above all this resistance and had clear skies ahead, no resistance above, and it went up with extreme strength, you might have considered trying to find buys up here. But you know, it just wasn't worth the risk reward. When it failed to go higher and broke down underneath the hourly right here, this is a trade I might take, but keep in mind the daily, weekly, monthly trend is up, so you're not likely to make much money doing a counter trend trade. Draw your fibs on there and look to get out of the Fibonacci profit target, especially with two counter trend buy signals right there at the low. And on the next move up, because of the extreme weakness, you might have shorted it, and that might have only generated 5 or 10 pips a move, and that's it for that currency. I probably would have avoided this due to the choppy nature and all the resistance above. This currency has the weekly and monthly trend is down. However, it's been down 7 days in a row, so it's very likely to have a pop to the upside. So I might be a little bit more aggressive in this currency. When it was above the hourly and pulled back earlier today, this counter trend buy signal, when it went back above the hourly moving average and the bars went green, I might have got in there. And because it's been down 7 days in a row, I'd expect a bigger move up, and I would have held on to the fib targets up here. Notice not a whole lot of explosive momentum. It was more strong the second time up than the first time, but you want to get out of that trade here. And because it wasn't off the charts strong, you might not have bought this pullback. The pullback obviously worked. Trend explosion buy here worked. When it fell off later in the day, you have your fib profit target from this first wave, and it's usually a good idea to look for buys at the fib targets, especially if a currency like this one's been down 7 days in a row. It's very likely to go up. You might have got into this trade right here when it broke out. You stop underneath here. It went up a little bit, pulled back, went up again. At that point, it might stop really close to break even, and then it exploded up. And because of this tremendous intensity, you buy the next pullback, and you're in that trade too. Because we're expecting this thing to go up because it's been down 7 days in a row. And you know that at a quick glance using our tools. Here's the euro dollar. Again, this thing's been down 3 days in a row, so we're expecting it to go up. And you have a narrow range breakout right here earlier. This one's likely to go up. Typically I don't like to buy narrow range 7 breakouts when it's underneath the hourly, but once it breaks above the hourly and you see more momentum in any direction in the last 4 or 5 hours, you might have bought this little flag pattern right here, and the market just exploded up and found some selling at my projected fib level because it had extreme strength, and on the pullback not that much weakness. This is also an Elliot 2-wave pullback too. Draw your fib off the first wave, and notice again almost to the exact very pip the 1.382 fib hit. Watch our trading videos for more details. I would have definitely taken that trade and got out with 40 or 50 pips on the way up, and it didn't have that much momentum, so I probably would have avoided this currency. It fell with a lot of weakness right here, but it's above the hourly. You don't want to sell a currency when it's above the hourly because the hourly oftentimes is support, like you can see here. You might have sold right there, but you didn't really have much opportunity there. Don't take trades that aren't likely to give you 1.5 to 2 times more potential profit, you know, where the next support resistance area is versus what your risk is. So don't take a trade with a 10 or 12 pip risk you might only make 10 or 12 or 15 pips on. It's just not worth your time. Now here, as it exploded up off the chart strength, you wait for that pullback. You got in right here. You might have made 20, 30 pips on that. That's also another textbook example of the Elliot 2-wave pullback, almost to the exact pip. So today, without a shadow of a doubt, was the day of the Elliot 2-wave pullback. Great trading day.